It's a pleasure to have you all here for the next 60 minutes or so. Let's make great use of our time. And, we're going to start outlining what we want to achieve for our call today.
Here you go, Greg.
So, I just wanted to quickly introduce myself. My name is Greg Chan, and I'm the Microsoft Marketing Manager at Crestwood Associates. If you're wondering, that is 100% me. That is not an AI-generated headshot. That is purely authentic. I probably could have used a little bit of better lighting, but nonetheless, I work with our teams and partners to create educational programs and resources that help organizations better understand how ERP and modern business technologies can improve operations and support growth. My role also includes something like today, hosting a webinar just like this one. And I'm here to make sure everything runs smoothly and occasionally reminding people they're on mute. I'm sure we've all been there. So I'm really glad you could join us today. And we're excited to walk through some insights that we hope will be valuable for your business. A little bit of housekeeping before we get started. Everybody's joining on mute today. But please feel free to use the Q&A to ask any questions. We're going to monitor those along the way, and we'll be sure to address those at the very end. So just a little bit about Crestwood. I wanted to let you know that we've been delivering ERP solutions for over 27 years. We support organizations through implementation, customization, and long-term optimization. We're a trusted partner of both Microsoft and Acumatica, and our team specializes in industries such as manufacturing, distribution, construction, and professional services. One of our strengths here is that we have certified developers, support, and customer success teams all in-house. And that allows us to provide faster solutions and ongoing guidance as your business evolves. Everything we do is backed by what we call the Crestwood software that works in fees. Another thing that really drives how we work with clients is our company values. At Crestwood, we hire, promote, and make decisions based on 3 core values: work smart, have fun, and deliver results. Work smart means operating with transparency, accountability, and integrity in everything we do. And you'll see that in how we communicate, implement solutions, and support your team. Have fun is all about curiosity and collaboration. And yes, we have fun in the ERP industry, I promise. And that's constantly learning, exploring new technology, and working closely with our clients to solve problems together. And lastly, we deliver results, which means focusing on real outcomes. Our goal is to always implement solutions that work and drive measurable improvements for your business. And these values are really the foundation behind what we call the Crestwood Guarantee and how we build long-term partnerships with our clients. Just to give you a little bit of a breakdown about our 27 years of ERP experience, we started with 2 Ernst & Young colleagues way back in 1998, working out of a Chicago basement, and we've grown into a national team focused on helping businesses modernize and optimize their ERP systems. Over the years, we've expanded through strategic acquisitions, strengthened our leadership team, and invested heavily in building a stable group of ERP experts. We also transitioned to a fully virtual organization and embrace the shift towards cloud ERP so we can better support clients wherever they operate. Many of you on this call have been a part of this journey with us, and we're grateful for that partnership as we continue helping your teams get more value from your systems. And as many of you have experienced, our role at Crestwood goes beyond ERP implementation. We work as long-term advisors, helping align your systems with how your business grows and evolves. And that includes consulting from our experts, in-house development when customization is needed, and ongoing optimization to help you get the most value from your ERP over time. And so with that, I'm going to kick it over to Travis, and he's going to go over a lot of interesting stuff with Avalara and the state of tax.
Awesome. Thanks, Greg. And it looks like I think I will switch that last slide over to Avalara and the tax changes. Here we go. Perfect. So 10th edition of the tax changes. I'm doing a slightly different webinar. We have a first of the year tax changes webinar and then a mid-year tax changes webinar as well. It is one of our best webinars throughout the year that we put on, and I'm giving a little bit of information today. So again, hopefully you get some information out of it. Obviously, it's not legal advice or tax advice. I just play a sales tax expert on TV. So I have been with Avalara for a long time. I am aligned to the Acumatica space. However, I've led multiple teams on multiple different platforms, from the small startups. I led a team previously on the Microsoft space, so both like the SL and GP platforms, as well as Business Central and Finance. I am now overseeing the Microsoft or the Acumatica space. And before Avalara, I didn't know anything about sales tax compliance, but now I can entertain quite a few accountants with my knowledge on sales and use tax. So we're going to go through the state of the states and how they're expanding in regards to sales tax compliance and the trends, a couple of slides on the enforcement and amnesty programs, as well as just new developments overall, specifically on the cross-border and tariffs and changes. So we will start with the poll question number one. What has been the most challenging aspects of managing tax compliance for your business last year and into this year? So Greg, I think you're monitoring the poll questions, and we'll give you a couple seconds to click on A, B, C, D, or E. While you guys are going through that, I definitely think that, I mean, there's no wrong answers. I see it all across the board. Nexus, or where you have to calculate sales tax, can trip people up, but even figuring out what rate to choose, or a lot of Microsoft and Acumatica customers work with a highly exempt customer base, but the compliance component at the end of the month always comes around, whether you take vacations or whatnot. So definitely no wrong answer here. So Greg, what do we got in the polls?
Yeah, it looks like we have a few different answers here. One is determining nexus. Another is tracking exempt sales and exemption certificates. And then the last one is keeping up with changing with.
Definitely. Perfect. Well, I will weave some of those components into the webinar. I appreciate it. Thank you. All right, the state of the states, where are we at? So for an economic outlook, about 16 states, or a third of the country, is growing in regards to their budgets for the governments. About a fifth, or 20%, are really kind of treading water or kind of staying the same. And then almost half has a high risk of recession. So on a state-to-state basis, where those economies are going. And so really, what's happening out there? Well, you have everyone's heard about the One Big Beautiful Act at the federal level, and how that determines is it really trickles down to the states. Obviously, you see the Medicaid and the SNAP assistance program will obviously have a big impact, but what are the states doing? So Colorado, I'm highlighting Colorado, Idaho, and Illinois on some of their responses. But overall, the total balances in the rainy day funds declined in 2025 for the majority of the states. And those rainy day funds are going to decline again in 2026. Colorado specifically is looking at a shortfall of about $1 billion to that big, beautiful bill. Illinois, again, looking at about a $267 million deficit on 2026. So really this is what's happening, but what are they doing about it? Sales tax is obviously revenue for the state. So whether it's sales tax or any type of the other taxes, the states in blue expanded their tax base last year in 2025, and then those orange states in 2026 are looking to expand or broaden their sales tax footprint. So interesting enough, Montana, if you see up there at the top, they currently don't have a sales tax in Montana. And so interesting enough, they are one of those states that are looking to broaden their base this next year. I know that software, obviously, Crestwood is not one of your big pillars, but if anyone is in software, Maryland had a huge change at the middle of this past year, specifically on software technology and kind of that tech tax, if you will. So the exemptions on this were only really created for a handful of companies, mostly around cloud computing and cybersecurity. And the tax was really tried to apply very broadly across all of mostly technology companies, as Maryland typically didn't tax software previously. So an illustration of how they broadened their tax bill. Washington really focused on communications and advertising, so in the IT services. So whether it's IT services or online sales. Interesting enough, the historic transactions from newspaper or printing or radio, that was excluded. So really trying to tax the new technology moving forward. Texas also had a tax on data processing the middle to late of last year for data processing services, whether it's payroll, whether it's word processing. So that was put in effect April 2nd, so not on April 1st. And then later in the year, the first part of Q4, it helped with marketplace providers and trying to get more tax. Basically, all three of these states, it's an example of just trying to increase the tax footprint, have more businesses be required to collect and remit tax, thus help get revenue for that state on a state-by-state basis. So brings us to poll question number 2. Has your business had to make changes to your finance team's processes to account for tax changes that went into effect in 2025? Whether you hired more people, A, outsourced tasks for B, or any other changes that you might have to make. I've definitely seen companies do a whole sorts of things, whether it's hire more people, whether it's outsource and utilize a software, just put more responsibility on employees. So Greg, how are we looking? I don't have visibility to any of these polls, so you're going to have to help me out.
Yeah. It looks like the majority have outsourced tasks.
Yeah, makes sense. A lot of the, not necessarily just Avalara, but thinking about Crestwood and upgrading your ERP, just being more efficient and being able to utilize technology to make the lives easier of the folks that are there. So that makes sense. All right, so what's new? Very similar to those states that we talked about just before. So a couple of the states are trying retail delivery fees. So a couple of years ago, 4 years ago, Colorado was the first to adopt a retail delivery fee. Minnesota stepped in. Interesting enough, there wasn't retail delivery fees enacted in 2025. And a lot of times because they were implemented with difficulties. Who is subject to the fee? How does it apply to certain thresholds? Which products are subject to the delivery fee? So the city of Chicago is looking at a retail delivery fee. And again, 12 states are looking in 2026 for retail delivery fees. Again, another example of trying to, whether it's a specific jurisdiction in Chicago or a jurisdiction throughout the state. Illinois, I thought this was very interesting. They tried to simplify but also complicate sales tax compliance, but really it's doing one thing, is trying to ensure that more companies are exposed to sales tax compliance, as well as there's more products exposed to sales tax compliance. So right on the top at the beginning of this year, Illinois made it easier to manage their economic nexus. So they eliminated the 200 transaction threshold. But what that means is those companies that might have a small average sales price and go over that 200 economic nexus threshold really just tried to make it the 100,000. So try to make it so more companies could need to be registered for compliance. And then again in January, they eliminated the tax on groceries, but allowed the local jurisdictions to still impose that 1% grocery tax. So really tried to eliminate it at the state level, but still have the local jurisdictions be able to be required or be able to impose this 1% grocery tax. They also, interesting enough, if they didn't have a destination-based zip code or address, then they would be able to apply a 15% tax rate for those transactions. Again, trying to increase the cost, but make it a little bit complicated if there's no address or there's no zip code or anything. It just shows the state of Illinois. So really tried to make it more specific. Again, you think of one layer deep. In the case of an audit, they're going to go back and look at those ship to addresses or the address that they use to determine the tax and be able to make, I'm not going to say a loophole, but just a little bit more difficult for compliance components. I want to talk about amnesty and voluntary disclosure programs here because there are some amnesty programs that are coming up in last year and then into this year. So really what we're looking at is trying to have the states bring forward more taxpayers. So what this means is if you weren't currently registered, the amnesty program opening up a time that you can come forward, remit the tax and get registered without penalties and interest. So Washington is currently in the middle of a amnesty program from July 1st to April 30th. So about 6 more weeks, specifically around business and occupation tax, their B&O tax that they have in Washington. Washington doesn't have a quote unquote income tax, but this business and occupations tax is on your gross receipts. So both taxable and exempt sales into Washington. So while it's not an income tax, it kind of is an income tax. So doing an amnesty program for the next 6 weeks and then kicking it off again in the summer for another probably 10 months or so into 2026 and 2027. New Hampshire doing an amnesty for certain tax types. It looks like it just expired. Illinois and Indiana offering for Illinois for the remote retailer tax amnesty, and then Indiana for all tax types. So yeah, those are the amnesty programs. The other voluntary disclosure process is a very similar program that each state has a little bit of their own rules. However, it's a program where you can come anonymously to the state. You would say that you need to be registered. You can pay back tax liabilities and reduce the penalties or reduce the interest in some states. But basically, you're paying the tax for the last 3 or 4 years that you owed. Then on a move forward basis, you're registered without opening up the door to an audit. So these are state programs that you can work with a partner, do it by yourself. But Avalara does the voluntary disclosures where if you have a high liability and it only has a limited look back of 3 or 4 years, you can pay the sales tax amounts and then get registered moving forward and not open yourself up to a 7 or 10 or unlimited look back period in the case of an audit. So both the tax amnesty and then the voluntary disclosure programs. We're going to talk about the streamlined sales tax next, which was in the upper right, but wondering if any of the folks out there have participated in a tax amnesty or a voluntary disclosure program. I have seen folks have the obligation to collect and remit, 5, 7, 10 years, and the voluntary disclosure would limit that look back period to 3 or 4 years. And so it can reduce the overall liability. Obviously, it's definitely not a fun program to be in, but it's a stopgap that then you can pay your liabilities, get registered, and be compliant moving forward.
Obviously, it looks like a couple have said no, but then we do also have an answer yes, and then another I don't know.
Yeah, all over the map. All right, I appreciate it.
Yeah.
So the streamlined sales tax, this is a program that was created, I'm going to say about 25 years ago. So if we think about before we had remote sales and remote nexus, you had to have a physical presence in each state. So the streamlined sales tax is a program where 24 states have come together to simplify the rates, the rules, and the jurisdictions. Before 2018, it was pretty much an all or nothing program. You had to register in all 24 states. Now you can pick and choose the different states that you want to register in. So you'll notice on some of the sales tax returns that even though you're not signed up for the SST, you're filing a SST sales tax return. And what that means is they just centralize the forms to make them more consistent across the different states. If you're utilizing a certified service provider, Avalara is one of those, and you don't hit certain thresholds, if you have remote sales, you can actually get free compliance from certified service providers. Free compliance, free transactions. It's really a win-win-win all around for each state because you, the retailer, are getting registered and you'll remit tax. It helps a certified service provider like Avalara. We get a customer to bring on board, and it helps you because you get free compliance. So it's really a win all around. The two big thresholds are 50,000 in W-2 payroll and then 50,000 in property. So if you do not hit those two thresholds in a state, but you need to get registered mainly for economic nexus, the streamlined sales tax might be a good fit. So it's 50,000 in W-2 payroll and then 50,000 in property. So I think of the property component. Obviously, if you have a location, you're going to hit that. But if you send property into a state, whether you rent equipment or some retailers will send a pallet of their goods to an Amazon warehouse, that would be considered property. So a couple things to look out for. If you guys use 1099 employees, those aren't W-2 employees. So yeah, a couple things, but the streamlined sales tax is a fantastic program for those that qualify. Other businesses, just because of how they operate, it's not a great fit. It's definitely a program that if you can utilize, I would recommend it. So I mentioned Nexus, so let's chat about it. The really Nexus is that obligation to collect and remit tax. So when we say, do you have Nexus in North Carolina? It is, do you have that obligation to collect and remit tax? So the Nexus challenge, though, so there's a handful of components that will trigger an obligation to collect and remit. There's actually really two pillars that I call them. The first is traditional physical nexus. So whether you have owned or leased real property, if you have a location, if you have employees in that state, you have triggered an obligation to collect and remit in that state. I consider it boots on the ground. So if you have sales reps or employees operating in a state, many times that will trigger a physical presence and an obligation to collect and remit. What is, I can't really say new, but what is new is economic nexus and South Dakota versus Wayfair. So if you have revenue in a state over a certain level, then you have triggered an obligation to collect and remit. So it's definitely not only e-commerce. E-commerce is in the news because, yes, they have remote sales, but many folks that I talk to are operating in one state and they ship things out of state, whether that's through, a Microsoft ERP, whether that's Acumatica. It's definitely not just for e-commerce. It's really remote sales where you might not have a physical presence. The United States makes it very difficult. So each state is a little bit different. It can be as little as $100,000 in sales or 200 transactions or invoices. And the reason that those thresholds are in place is the state wants to get away from, and I'm using quotes, small companies. And we could probably have a 45-minute debate on what the government classifies as a small company, but they're trying to make it, all right, I don't want a brand new business, but that business that has some sort of obligation has hit a threshold, and that's where those thresholds come from. So they want to eliminate the burden for small businesses, and so that's why those thresholds are in place. One of the things that pops up frequently that I'd want to talk about here is exempt sales are right around 39 or 40 states. So just because you sell to exempt users, it still might mean you have an obligation to collect and remit. Now, I'll talk about it on another screen ahead, but you might not have a super high liability in those states because you might sell 100%, 95% to exempt users. But you definitely want to track those exemption certificates, because if the state comes knocking and you actually need to be registered when you're not, those exemption certificates are the proof of why you did not charge tax, and it might be an easier conversation. So this is what I mean on the United States does not make it easy. So you can see the big bold states, New York, Texas, California. Those states have 500,000 as a threshold. New York also has 100 transaction threshold in there. Alabama and Mississippi are the two states that have $250,000 in sales. And then the rest of the United States is somewhere between 100 and then adding or not adding the transaction count. So, and when we talk about a transaction, think of an invoice or an order. So it's 100,000, 100,000 or 200 transactions. And then you have those states that are 100,000 and 200 orders. So it definitely differs. Like I mentioned on the last slide, 39 states count exempt sales in these thresholds. So the majority of the states do count the exempt sales, which is, I know, hits home for a lot of folks on the call. I think of the state just like a business. Now, sometimes they can print money, so it makes it easier to increase their revenues. But when they need revenues, it's that auditor is like a salesperson for each state. They're going out. Their whole job is to try to bring more revenue in towards the state, and so they focus on non-compliant businesses. So folks that don't have a documentable, repeatable process, they're non-compliant, and that auditor can hopefully get dollars out of them. A lot of times it's due to use tax. A lot of times it's due to not collecting an exemption certificate. Those are kind of some of the two things that pop up. Slide says it all, really. Companies that are audited can owe unpaid sales tax plus penalties and interest. And a lot of times that auditor is going to come back to that same company year over year until they get that fixed. So something that we see a lot of is, hey, we're being audited in one state and we don't want that state to share that information with those other states because they can come on in a hurry, more and more states year over year. Really, it's complex. What's outlining, they're being more aggressive with state audits. And really, I mean, kind of the numbers down at the bottom, 61% of tax professionals say that even e-invoicing and overseas complexity is just adding to what's happening in the US, since overseas with VAT, a lot of times the rate is pretty straightforward, but unlike the US, that e-invoicing component is becoming bigger and bigger deal when you sell overseas. So there's 13,000 different tax jurisdictions throughout the US. Some states like New Jersey, Michigan, very easy in regards to the rate and the jurisdiction. There's just one that makes it easy, but even those one jurisdictions can change. Obviously, California, that's a whopper, but each state is a little bit different. And thinking about those 13,000 different jurisdictions, last year there was almost 12,000 rate updates throughout the US. I remember this story vividly back in 15 is I would do a demonstration with one address in California over a 2-year period. I just would do demonstrations consistently. In that 2-year period, that one address changed the rate and the taxability at least 4 times, maybe 5 times, but I don't want to exaggerate. It was at least 4 times. So the special taxing jurisdiction changed from 2 jurisdictions to 1. A couple months later, it broke back out into 2 jurisdictions, and then the rate changed at that city location. So there's hundreds of thousands of taxability updates, like I mentioned with Maryland. And then what's coming up is sales tax holiday rule updates. So often you'll see a back to school holiday for clothes. I know Florida has that. So it's 10 days right around the August or September time where clothes are not taxed. So mark that on your calendars. If you're in Florida, you can take back to school shopping at 6 or 7% in decrease. Very similar to kind of that poll question up front. Definitely there's no one thing that businesses find most challenging. Keeping up with the changing tax laws. I know for those construction companies, each state is different. The projects that you're doing, what do you pay sales tax on? What are you accruing use tax? Just the laws in each state for those are very different and complex. The Nexus conversation, we talked about those, but when do I need to register for tax? Or what is the rule in the state in regards to Nexus if 90% of my sales are to exempt users? So down close to the bottom, you have tax calculations, managing exempt sales, or probably exemption certificates, because the exempt sales are probably going to be pretty easy on the regards to the tax rate. And then the compliance component, remitting tax or the international compliance. Definitely overseas, when you get into that, it's not necessarily the rate or charging tax. I hear from our European office, it's almost always on the compliance side. So remitting that return back to the country, usually on a quarterly basis. Speaking of that, getting into a little bit of Avalara stuff, once we calculate the tax or determine that it's an exempt user, we're going to create, file, and remit the tax returns back to the state on your behalf. So filling out the forms properly, making sure that we can remit those by somewhere in the 20th of the month. Some are the 21st, some are the 18th, but really saving time from cobbling reports together, ensuring that you're staying compliant, and making sure that you're not dealing with Excel spreadsheets and trying to manipulate the data. So really trying to make it easy. In regards to the exemptions tool and managing those exemption certificates with Avalara in GP and in Acumatica, and and in Business Central, you can do a lot of the exemption certificate management activities directly in the ERP. So you can request exemption certificates directly from customers. You can pull back the image inside of the ERP, and you can be notified when those exemption certificates are coming up to be expired and you need to renew those. So giving you visibility on how you manage your exemption certificates, really reducing risk, driving efficiency. And this says improving customer satisfaction. I've really seen where it's improving the employee satisfaction. It's absolutely making it easier for your customer to give you an exemption certificate, but I find that it's really easy and makes your internal employees' satisfaction a little bit better and giving them the tools to do their job. On the right, 40% reduction in processing exemption certificates and getting those exemption certificates. A couple slides left here. I just wanted to give you an overall view of Avalara. We've talked about the calculation and that determination, and then managing exemption certificates and then filing the returns. We have a ton of different ancillary products from international and the cross-border and tariffs and HS codes. A lot of times for those customers that specifically manufacturers and construction companies that need a guide to go understand the rules in each state. And so they might need to make that determination and understand how a specific state taxes something. That tax research component has brought all the research from all the different DOR websites all into one platform that's easy to use, and you can find answers quickly. One of the big things that we've seen this year is on property tax. Those folks that every single year and they need to understand what is taxable and depreciating your assets. That property tax component actually brings in to the US more tax revenue than transactional taxes. So that's a big component. For the folks that have heavy equipment, a lot of different locations, the licenses and registrations, more on the business licenses and automating that. But you can see if you have your company here right in the middle, the right side is on the AR side. So the calculation on your invoices, managing exemption certificates, and then filing the returns, and then the e-invoicing component. So this is on the AR side. Obviously, you have the AP sides, remitting the use tax, remitting your exemption certificates to your vendors so you can buy exempt, and then obviously on the reporting element on the AP side. So in capturing all that information for your tax return. So we do a ton of different products. Obviously, our flagship is AvaTax and the calculation, determination, exemption certificates, and filing the returns, but definitely different components depending on how you run your business. All righty, we have come to the end. Poll question number 4, what do you want to have happen next? You want to talk to me at Avalara? I am aligned on the Acumatica side to Crestwood, and I can set you up with, if you're on the D365 or the GP or SL, we have a colleague who has run these webinars before, John Harrington. You can talk to Greg and the team at Crestwood, or hey, just here to have a little bit of fun. Talk sales tax on a Thursday afternoon or Thursday late morning. Greg, how are we doing on the slide? How are we doing on the poll question?
Definitely a lot of good information that you were able to share with us, Travis. I'm just looking at the Q&A, not too much activity in there, but kind of going back to the first poll, I know, and you mentioned Nexus. So a question came up that I thought of, like, what do you think is the biggest mistake that some of the companies make when it comes to the Nexus taxes? Is it determining whether or not they actually need to file the Nexus tax, or is it something to do with the certain thresholds, miscalculating thresholds, or things like that? What would you say is the biggest mistake?
I would say not reviewing it in a consistent fashion. So where companies get into trouble is they don't look at their Nexus footprint annually. So it can go 2, 3, 4, 5 years. They might have had an employee in a state, they're not registered, they've made sales into that state. That's where probably the big issues come in. I would say that there's no one size fits all. So I'll give you 2 examples. You just want to make sure that you understand what the risk tolerance is for your business. So I talked to a customer who actually was located in Canada. They were selling into the United States. They utilized Avalara simply to track economic thresholds. Once they hit a threshold, they wanted to register for sales tax compliant. They wanted to be 100% exempt right up front. I also talked to a customer. It was a large customer, but they only registered in a state when they had $1 million of sales tax liabilities. To me, that sounded like, wow, you have a lot of outstanding liabilities. but they were a billion-dollar company. They didn't want to deal with the compliance component until it hit that threshold. So that was their risk tolerance. So there's no one way to do it. There's no one way to do it correctly. I would say just make sure that you have visibility and you're reviewing your Nexus footprint consistently. It is a really good question. I work with a lot of companies, that are 100% exempt. They're putting on an e-commerce shopping cart. So now they're going directly to the end user. Would always say to, even if you're registered in 1, 2, 3 states and you sell 100% exempt, outside those 3 states, I would just make sure that you're collecting the right documents, even outside of those 3 states. Once you get registered in a state, you can start collecting tax probably from your e-commerce shopping cart or just a customer that needs to taxable. But if you have the exemption certificates when you're not registered, it can just reduce your total liability because you probably don't have a sales tax liability if you're 100% exempt. But those exempt documents, if it's found that you have an obligation, those are going to be the reasons that you didn't collect tax. So one of the things that come into issues is you've sold to a company for years, they either change their name, they go out of business, they have activity. So then it's difficult to get that company's exemption certificate maybe 4 years down the road. So I would just be proactive in gathering exemption certificates, have them on hand. You just never know what's going to pop up. And if someone has M&A activity and it goes 3, 4, 5 years, and all of a sudden, you have an audit for that period and you need to get that document, it might just be a completely dissolved company where you don't have the ability to get a document from them. So there's definitely no one way to do it. I would collect exemption certificates from your customer base, but I would definitely make sure that you're reviewing your Nexus footprint consistently.
Oh, wow. Yeah. A lot of moving parts there, I must say. But definitely sounds like the guidance from Avalara will help you through that entire process.
Yeah, I always like to talk with people. I talked to actually a distributor right after Acumatica Summit at the later part of January. They had future plans to put on a shopping cart. They were 100% exempt. They had a small footprint. We agreed that, hey, let's chat again in the summertime. Once you have that shopping cart more established, then we can look at, automating the exemption certificates, calculating tax through the shopping cart as well as in the ERP, so the reporting matches. But oftentimes, a quick conversation can just kind of set you in the right direction. It might not be, hey, I need to move forward with Avalara today or whatnot, but it could set you up for activities that you can do in the next 3 to 6 months outside of Avalara. So then when it's time, then it can be you've done some of the legwork ahead of time and we can set you up on the right path.
Awesome. And one of our first polls as well, just quickly, a lot of people responded that keeping up with changing tax laws is always a concern. And you mentioned the sales tax holiday rule update. What would you say is often the most overlooked tax law that changes, or does it depend on the year, or is there any commonalities that you see that with changing tax laws year over year?
I wouldn't really say that. I would say the commonality is there's no bad question. Always ask questions. No one's doing it 100% perfect. It's just trying to make sure that you're staying compliant, you're not spending a bunch of time, you're really pushing the business. In reality, accounting teams are unpaid employees of the state trying to calculate the tax and then remit it back to the state. I would just say there's no stupid question and making sure that you guys are staying compliant so then you reduce the risk as much as possible so then you can focus on the business.
Awesome. Awesome. And I'm sure, is there a way that, do you guys have a newsletter that you talk about all these sort of tax changes? Because I know, you mentioned like thousands of tax changes in 2025. So is there somewhere where, people can learn or have that sort of cadence where they, anytime there is an update that they get notified from Avalara?
Yeah, I mean, there's we have a top-notch marketing team, puts out a bunch of blogs. We do a ton of webinars like this, not only for myself specifically with Crestwood, but I mentioned the year-end tax changes in 2026. We'll have a mid-year tax change webinar that is really good. We have a huge blog that you can get notified of, and again, there's definitely resources that we have on our website, whether it's, rates or a lookup or something like that you can utilize.
Sounds good.
Well, Greg, this is me and you. You're in the blue, I'm in the orange, pointing to Avalara. If you do have any more questions, hopefully you guys know your Crestwood customer success team. And that's all I have today. Thanks, everybody, for joining.
Yeah, thank you everyone for taking the time to join us today. And I did want to say a special thank you, obviously, to the team at Avalara, sharing your insights on the evolving sales tax landscape and these topics. We appreciate it because it continues to impact businesses in a lot of meaningful ways. And we appreciate your expertise, Travis, in helping keep everyone informed. So yeah, if you guys have any questions, please don't hesitate to reach out for our team. All of the contact information for the CSMs is on the screen here, and feel free to reach out to me personally as well. Thank you, everyone.
Have a good weekend.